Okay. So here we go. All right, hello everybody. This is Addy and Sebastian for Sharpfokus Daily. So we've been missing a few days, but we should
Call it weekly now.
call it weekly. Yeah, no, it should be daily, but it's not daily at the moment. So on Monday we had a look at the rupiah, which has had this spectacular recovery from 15.2 to 14.5, 14.4. Now it's a bit weaker today, 14.6. From my personal, the pound has gone from 20,000 to 19,000. So that
Rupiah less.
so that's quite 1,000 rupiah gain. That helps me a lot because I have expenses in pounds. But today we should be looking at the stock market, and so the rupiah has recovered. The stock market has gone up a bit. It's gone from about 5,850, 5,950, about 100. But the stock market has not really had as big a move. The currency has reversed like 3 or 4 months of weakness, right? In very quickly. So it looks like it's kind of broken. It's quite significant.
Yeah.
But the stock market still cannot get through this 6,000 level. It got quite close, 5,980 or something yesterday or the day before, but it hasn't been able to break through that. That is a very significant
Takes
level.
a little bit of time because the big caps going up first, and then I suppose smaller cap will adjust later. The banking has done well during the recovery.
Yeah, because interest rates also came down. Because I would have thought that the currency strength would translate into gains for. There's a big correlation between commodities and the dollar. When the dollar's weak, commodity prices tend to be strong. But although the rupiah has had quite a big strengthening, the dollar hasn't weakened that much. Weakened a little bit, but not that much. And we haven't seen, like, oil is even lower, I think, like $60. And my one, palm oil, is really just unbelievably weak still. So we haven't had that kind of moves. So we haven't had a big rally in commodity stocks in the stock market or anything like that. What do you think the stock market is looking for next?
I think some of the performance of the banks are very, very good in the third quarter. That's why the rally, I think. Some of the corporate has done well too.
Yeah, I have to say I haven't looked. But, I don't have that much data on all the companies. But, yeah, in theory, lower interest rates will help, especially companies that have any borrowings.
Yeah.
Stronger currency will help because there are definitely forex losses in the third quarter.
But by the look at the third quarter financials, seems like the big company are well adjusted to the economic uncertainties as compared to the smaller one. So I think that's has something to do with why they recover first.
Yeah. Well, I saw, because your guys have been writing about like the cement companies, they seem to have had some price recovery and also cost, like efficiency gains, if you like, although I'm not a big fan of efficiency gain. And then Doid, I think, so the commodity supplier, the commodity service companies having some improvements because of better weather or whatever. So yeah, some better results. But it just seems like the stock market is not that enthusiastic about what's happened. Not as enthusiastic as I would have expected. And we had a big rally in the US stock market. but not much here. So we're still at this very low volatility. The market hasn't moved much for 4 or 5 months, but not much upward momentum yet.
But you can see in the debt market, I think most of the inflow from foreign investors come to the
Government
bond
bond.
market, yes,
Yeah.
first,
Yeah.
and then this takeover of the Freeport McMoran
Mm-hmm.
is actually done.
Right.
They managed to get commitment from offshore founders, I think $4 billion, all from the offshores banks.
You mean the government has funded their purchase?
Yeah.
From the bank? Okay.
It's
A positive signal.
it's a positive sign that there is confidence from the offshore to Indonesian economy.
Yeah.
That's one big investment they made to a holding company basically.
Yeah.
Inalum is not listed,
Yeah.
government owned 100%.
Yes.
That become holding company of a lot of mining's
Yeah.
company.
Tima.
Yeah.
Antam. Yeah.
And now Freeport.
Yeah.
So it's a little sign, I guess, that can translate into positive things in Indonesia ahead.
Mm. So the bond market is still open for foreign investors.
It always open.
Yeah, but they're willing to support
It's just sign that
money coming in again.
Yeah, money coming in. That's why the currency also strengthening and
Yeah.
bond market rally.
And interest rates coming down.
Well,
And the classic foreign-owned stocks like BCA have gone
yeah.
shooting up. Yep. Yes, it's all good. But it still feels not that convincing for the stock market. All right, but I think we'll leave it there. So from my point of view, not that happy with the movement we've had so far, and we seem to be really struggling to break this 6,000 index level. From your point of view, things improving, and maybe it's like a feed through, so it should filter down to the.
You need to give a little bit of time. I mean.
Okay. And then to end it, so the Sharpfokus daily yesterday was going back to the GDP numbers. So I always measure the GDP, the stock market in terms of GDP. So which should I mean we know that the JCI index, which is all share, is very cheap if we compare it with nominal GDP. So nominal GDP, the last 4 quarters is 14,500 trillion rupiah, and the stock market is stuck at 6,700. So the ratio between the stock market value and the economy is now about 46%, even lower. It was 50 to 60%, now 46. So compared with other markets in the world, that is incredibly low. And then if you take the GDP back, I always do it from when I arrived here, 1996. The GDP has increased almost 30 times, whereas the stock market has increased only about 10 times. So there's a lot of room, that big, for the market to go up. And if you do the calculation, the index level, if it matched GDP, should be at 17,900.
You base everything in US dollars?
No, this is just taking nominal GDP,
Oh, okay.
looking at how it's changed since 1996. If the stock market followed the change in nominal GDP, the JCI index would be at 17,900, whereas it is at 5,900. So it looks cheap and a lot of potential upside. And hopefully we get the filter through from the foreign investors coming into the big caps and the bonds, and that goes into other stocks and pushes the market up. We will see. All right. Thanks very much. See you next time. Okay.